Exercise 2.3, we're given slightly more information than the previous question, and we're asked to do a classified balance sheet. So we'll start with current assets and work our way through the list. We've got cash on hand, stock of goods, a debtor, stock of spare parts, and another debtor. So whether you can combine the debtors or the stock, it really doesn't matter at this point. You do whichever approach is best for you, and we'll learn what to do on the next SAC. That'll bring us to our non-current assets, but firstly remember to total the current assets in the right-hand column, so you can see the total there, 33,480. Then make our way through the non-current assets section. So remember, the tip was to do each section one at a time. I think you'll save time and space that way. Non-current assets, we've got the premises, we've got the office furniture and fittings, we've got the vehicles for the business. The vehicles for private, remember, under the entity principle, we won't include the owner's personal vehicles as an asset of the business, so we'll leave that out. That'll be all of our non-current assets, and again, we'll total them up, and then we do our total assets at the very bottom. That'll take us through to our current liabilities, and we've only got a few items left, so we'll make our way through it. We've got the bank overdraft, so just remember cash at bank can be an asset or a liability depending on our bank balance. So in this case, we've got an overdraft. I've got a creditor. I've got the personal home loan. I'm not given a date on that, but it's irrelevant anyway as to whether it's current or non-current. The entity test again says the owner's liabilities aren't the liabilities of the business. I've got a loan for a business vehicle here. It says $4,000 repayable over 2 years. That must mean there's $2,000 due each year. So we'll put in $2,000 as a current liability for this stage. And lastly, GST liability. We learned in this chapter that GST will always be current, whether it's an asset or a liability. So that'll go in and we'll total them up. We'll then do our non-current liabilities. So there's not much left in the list. We've got the mortgage, which isn't due until 2027. But before that, we've actually got the loan for the business vehicle. Just remember that we have the $2,000 that's current, and we also have $2,000 that's non-current because it's due in that second year. And finally, we have the mortgage, which isn't due until 2027. We'll total them up. And just remember, we don't now need to total our liabilities. We leave them as is. We just have a total for current and a total for non-current without a combined total. That'll give us our owner's equity section or capital, and we're not given that information. We're going to need to figure it out. So how do we do that? Well, looking at our combined balance sheet here, you'll see that we've got total assets available. We'll know our total liabilities, so therefore we rearrange the accounting equation. We'll be able to figure out how much capital is. So looking at assets or the accounting equation, we can rearrange it as owner's equity equals assets minus liabilities. So in this case, we've got assets of 174,680. Liabilities, if I total those two numbers together, I get 93,900. So therefore my owner's equity is 80,780, and I can put that in as the capital figure. And remember, when there's only one number under a section, we put it in both columns, or you can just have it in the right-hand column. Now what we're going to do is total up current liabilities, non-current liabilities, and capital, and that'll give us total equities of 174,680. And we're basically proving that the balance sheet balances by having a total assets figure and a total equities figure.